What happens though with IUL is they say, well, if you could earn up to 10%, but you couldn't lose, right? You're gonna lose the upside potential a little bit. You're gonna have to give up. Instead of getting 25%, you're gonna get 10, but here's the peace of mind for you. You're never going to experience that 25% loss. Hey, what's going on, cash flow hackers? It's Chris with Life 180, and for this video, I wanna talk to you about investing in insurance products and plans because, listen, just go around, take a look at TikTok, take a look at YouTube here, go around all of the top channels that are out there growing, are really focusing on utilizing life insurance as an investment alternative. There's so many different concepts and strategies out there. And the purpose of this video, what I'm really hoping to show in this video, is to get through the why, the how, and the what behind all of it, right? Like, why is there so much focus on life insurance as an investment? How does it really work, and what does it mean for you ultimately is what it comes down to. And so before getting into anything else, why don't we just get right into why this is happening? Now, if you don't know what Index Universal Life is, that is the product that is being sold more than any other product on the face of the earth right now when it comes to life insurance as an investment. Now, when you understand how IUL functions and what the story behind IUL is, it makes sense because it's being sold as a product that can give you upside potential and downside protection. So the story basically is saying, yeah, sure, if you could go put your money in the S&P 500 index, and obviously if the S&P goes up 25%, you're gonna get that 25% return. But if it goes down 25%, you're also gonna lose that 25% return. So IULs became extremely popular after the 2008 bubble. And in 2009 through 2014, they really revved up in popularity as a response to people getting absolutely destroyed in the housing crisis, in the Great Recession in 2008, right? Like, a lot of people lost over 40% of their portfolio values. And so with that, the story of upside potential and downside protection became a much more powerful conversation, right? And so what happens though with IUL is they say, well, if you could earn up to 10%, but you couldn't lose, right? You're gonna lose the upside potential a little bit. You're gonna have to give up. Instead of getting 25%, you're gonna get 10, but here's the peace of mind for you. You're never going to experience that 25% loss. And so here's the facts. The truth is, that is the way it works. You're not going to lose that 25%. Now, is it zero? No, you can lose money on down years because even on a 0 year, you still have the cost of insurance and the charges and all these things that go into it. But absolutely, it does help give you some upside potential. It does give you some downside protection. Now, there's more that goes into it. I have a whole playlist on how Index Universal Life works. And so what I'm going to do is I'm going to include the playlist up here so you can check it out if you want to watch and really learn and do a deep dive. If looking at utilizing Index Universal Life as an investment is something you're interested in, I would absolutely watch that. There's a lot of videos. I would click on the playlist. I think there's like over 40 videos in this playlist, and I would go through and look for the titles that really kind of hit the topics that you're looking to educate yourself and do a deeper dive on, because that is what it is. Like, it's the most common sold cash value life insurance on the face of the earth. Here's the deal. When it comes to IULs and whole life insurance, the reason IULs have gotten so popular over the past decade is because of the fact that we came out of this recession and they gained popularity, and we've had nothing but a bull run. And so they've actually performed halfway decently. However, there's been a lot of negatives in the IUL space as the decade has gone on, right? So now I've talked about why people are attracted to this insurance product as an investment and how it's being sold. What I want to talk really briefly, even though, once again, go check out my playlist on how Index Universal Life works. What I want to talk about is, how does it really work? Like, how should insurance be leveraged inside of your portfolio, or how should life insurance be viewed as an asset, right? Because here's the deal, words really matter. I'm a big believer words have meaning, and we have to be really, really careful with how we utilize them, especially in the context of pitching this financial advice, so to speak, or coaching people with this financial advice. With life insurance, I'm going to tell you right now, is a horrible investment. But what it is, it's a really fantastic asset if you buy it the right way, if you buy the right product, if you structure that product the proper way, and then you understand what role that product plays in the rest of your financial strategy. And so those three things are really, really important to understand. So let me take a step back and explain what I mean. Now, life insurance is not a great investment simply because it's never going to get a great return. This conversation that I just told you about the upside potential and the downside protection, listen, a decade ago, the conversation made a lot more sense because the upside potential was 16% and the downside potential was 0. Now what's happened is IUL companies have been reducing the cap rate. That is, the cap rate is just a fancy way of saying what's the most amount of money, what's the cap on the amount of money you can earn inside your policy. That is the cap rate. It used to be 16.5%, even 18% on some of these companies. Now it's down to 10% at the highest for most of these companies. I think a couple companies are at the 11 and 12 range, but the bottom line is every single one of these companies has reduced cap rates over the past decade. And so what happens is, contractually speaking, anybody who bought one of these policies 8, 9, 10 years ago with a 16% cap rate thinking, wow, I could earn up to 16% and I can never lose my money. Well, those people that thought they could earn up to 16% now can only earn up to 10% in this scenario, right? Because the insurance company has the ability to reduce that, and there's no guarantee that they're not going to keep reducing it. And contractually, they have the ability to keep reducing that number down to 3 or 4% in most situations. And so I don't know about you, but that's not something that I want to bank on from a long-term perspective when in the first decade, they've already reduced the cap rates by almost 50%, which is just crazy to me. Now, that's the other instance here when we look at this from a historical perspective. Index Universal Life is simply just, it's too immature, too young of a product to really know how it's going to react from a long-term perspective. And that's another thing that's concerning me. However, here's what I want to say. When it comes to life insurance, though, how does it really work? While it's not an investment, it is an amazing asset. What do I mean by that? I do a video, and I'm going to link it up here as well. It's called the Life 180 Pyramid, and it talks about the importance of financial design and financial structure in your financial life, because how we organize and structure our finances is the number one indicator of whether you're going to be successful or not when it comes to your money. And what I know to be true, and I've seen it over 1,000 times, is the fact that people are failing with their money because of the fact that they structure their money improperly and they don't have enough safe money. People are buying into this concept that they just need to invest as quickly as possible. They go out, they speculate, they take risk. Once again, watch that video, the Life 180 Pyramid video, to really drill this down and understand it. But they go out, speculate, and invest and take on too much risk far too fast. And because of the fact that the market is cyclical, a lot of people feel like they're doing really well for a short period of time, and then the market tanks, and you lose like a decade of growth and potential all in 1 year. Now, this has happened over and over and over again for the past 30 years, but because a lot of people will say, oh, well, buy and hold, just ride the wave, don't sell ever, just don't look at your portfolios. And historically speaking, if you go back to like, say, 1915 up to 1980, that made sense. You could look at the waves were not as drastic as they are now. But if you look at the crash in 94, if you look at the crash in 2000, if you look at the crash in 08, and then you look at what's about to come with everything that's happening right now, the last 30 years, 25 years, the rules have changed because the environment has changed. The way that we handle our monetary policy, the way that the stock market is stimulated, everything has changed. So we keep building these bigger bubbles, and then those bubbles pop, and that creates this downturn in the environment, in the economy, with stock portfolios, with investment portfolios. And then what happens is people are forced to make decisions that they have to liquidate these negatively performing assets just to survive, just to pay their mortgage, just to put food on the table, just to pay their car payment. And these are the reasons that people are struggling. And so what I know to be true is that people need to save money first. And this is something that Warren Buffett speaks about a lot. And actually, if you go through the CFP course, a certified financial planner course. This is something they teach to all investment advisors out there, that you need to start with safe money. You should have at least 6 to 12 months of income in a safe account before you go invest anything. Because in order to have a long-term investor mindset and actually do what they tell you to do, you need to have the safe money first to be able to do that and not have to tap into negatively performing assets when the economy goes sideways. Because when the economy goes down and when there's a correction or a recession or anything, which by the way is going to happen 3 or 4 or 5 times during your working career. So if we know that systematically and cyclically that is going to happen, why are we not prepared for it? So my encouragement to you is to really think about life insurance as an asset. Life insurance shouldn't be an investment. Life insurance should be that asset that is that guaranteed safe money for you, because of the fact that life insurance companies are the #1 risk managers on the face of the earth, hands down. That's how they've been able to do this for 170 years. They've never missed a dividend payment. They've always done what they said they're going to do, and their first priority is preservation of capital. So what does that mean? That means when you utilize life insurance as an asset, not an investment, that becomes your safe money. That becomes an inflation hedged savings account that's going to make sure your money grows and beats inflation, unlike keeping it in a savings account. It's going to give you other benefits. It's going to give you life insurance. It's going to give you living benefits if you become critically, chronically, or terminally ill. There's all sorts of things that come along with it, and I basically tell people it's a savings account on steroids if you design it the right way. This is not the kind of life insurance that Dave Ramsey and Susie Orman and the people like that love to hate. Because listen, if I were them and I just saw the policies that were designed improperly, I'd hate it too. Because there's a lot of policies that are designed improperly, that are designed to make the life insurance agent rich or get them paid a lot, and it's at the cost of the policyholder. It shouldn't be that way. So make sure, like anything else, you never invest or you never save, you never put your money in anything that you don't understand. So that is why I make all these videos. So if you're interested in that, you want to learn more about this and what it means and how to learn about this, because I'm a big believer, you should take the time. There's not much more important than your money in your life. I mean, we got faith, family, and ultimately money comes into all of it. Like, money is going to have a huge impact in your lifestyle when it comes down to that. And so my encouragement to you is take the time, educate yourself, learn about this stuff before you put your money anywhere. And so what does this mean for you? What this means for you, so we've covered the why and the how. Now let's get into what this means for you. This means that you have to start thinking. If you want to be able to really control the results in your financial life, you need to start thinking about, how do you structure your life financially? What do you need to do? And my encouragement to you is to stop thinking about going out and chasing risk. Stop trying to chase big returns until you are ready to chase those returns. Warren Buffett goes out and he speculates but he invests in companies. But the bottom line is, if he invests in a company and gets it wrong, it's not going to kill him, right? So my question to you is, if you go out and you put an investment somewhere and maybe you're loading up your 401k or an IRA or something like that, what happens if you lose your job? What happens if the economy does go in a tailspin? I don't think it takes a lot of convincing to have you look around and be at least a little bit concerned that there's a potential we're going to be coming into a recession if we're not entering one as I speak, right? And so if that's the case, I encourage you to think about, if a recession were to happen, if you were to lose your job, what would your financial life look like? What would your life look like? And if the answer is it wouldn't look good, or you'd have to tap into your IRA, your 401k, your investments, anything of that nature to be able to survive, then I really, really encourage you to think about life insurance as the foundation of your financial life, to make sure that your family is protected, to make sure you have that safe money for emergency, for opportunity. And that's the one thing I haven't talked about, is the opportunity component to this. When you have your money inside of a vehicle that you have liquidity, use, and control of, and it's guaranteed, and you cannot lose money in that account ever, well, when the rest of the world is struggling, that's when the people with money who are positioned well can take advantage of it. And so here's the deal. Coming back full circle now to end this video up, the title of this is Investing in Insurance Products and Plans, right? I'm a big believer, nobody should look at an insurance product or plan as an investment. However, It's kind of like the old BASF commercials. We don't make the products you buy, we make the products you buy better. Life insurance shouldn't be the investment you make. Life insurance, when done properly, should make the investments that you make better, because what it's going to do is it's going to force you to follow a financial structure. Once again, that's the number one and most important thing that's going to be the indicator of your financial success long term is your structure, not the investments you have, but the structure. And so it's going to make be the investment you make, it's going to make the investments you make better. And that is the number one takeaway that I want for you to understand in this. Do not lean on life insurance as an investment. Leverage life insurance to make the other investments that you make better. That can be day trading, it could be crypto, it could be real estate, it could be stocks, it can literally be a business that you want to start and run for yourself. It is just one of the most impactful, powerful financial tools on the face of the earth, and I really encourage you to look into it. If you have any questions at all, you can comment in the comment section below. I do my best to respond to every single comment. If you want to talk to somebody, go down, check out the link in the description below, get on the phone with one of our Life 180 coaches, and they can guide you through and answer any questions that you have. There is no pressure. I always tell people it is the least sales pressure kind of component with anything. I'm a big believer that we just want to add as much value out there. We want to answer your questions and be able to serve you, and if it makes sense, we'll work together. So that's it. Hope it makes sense. And once again, if you haven't already, make sure you hit that subscribe button, hit the bell, that way you get notified every time I launch a new video. And that's it. Have a blessed, inspirational day. We'll talk soon. See ya.